All right. Good morning, everyone. Today is Wednesday, 9/11/2019. And as you all probably know, last week I was not able to do a live show because we had that hurricane Dorian passing right over where I am, literally. And so it was pretty amazing. It took several days to prepare for the storm, and they actually evacuated my area. And I kept a really close eye on it, and it looked like it was going to stay just far enough offshore that I might be okay. But at the time, when I woke up on Wednesday morning, boy, I woke up to downpour of rain, high winds, and at like 5 o'clock in the morning, I just got startled out of bed, and I got up and stayed up. And so last Wednesday was Hurricane Day, right? And so I thought for sure that the power was going to go out. I mean, it was absolutely a miracle that we kind of escaped it. Actually, we got really super lucky. So this is this is a picture of what this thing looked like when it was literally parallel to where I live, which is right here. I am right smack on the Florida Georgia border on an island a block from the beach, right? And so I stand in my living room looking at like 20-foot waves out there that basically looked like they were about the waves were kind of spooky. That was the spookiest thing because they looked like they were at eye level to me, and I'm on the second floor. And so amazingly enough, the power did stay on. There was no way I was going to be able to do a show. I couldn't focus, right? I mean, literally, like this is about the time that I would have been doing the show. So the funny thing about these hurricane maps is, and I'm sure any of you guys that live anywhere near the coast or whatever, it was a pretty big deal on the news. But not everybody was as fortunate as we were, but you can see that I was just about like 100 miles offshore, and so we got very little rain, which is surprising. And so you look at these maps and you think, I've seen these bands. I've been through plenty of hurricanes around here. Typically we evacuate. This is actually the first one that I chose not to evacuate because I kept a really close eye on it. And so the day before, literally like on Tuesday, we were thinking about coming down here to Orlando. But one of these bands hit Orlando pretty hard, and so I'm sure that I'm sure that they got it worse than we did probably. We had a couple of bands come through here, some rain and some wind, but it turned out to be no big deal. Can't really tell by looking at this. Looking at this, you would think that all this would have really been getting hit, but I guess as it passed here, right? I mean, this is the directly when it was offshore here. As it passed here, like this part was not as strong as obviously this part, and so by the time this part wrapped around, it was further north. And that's one of the crazy things about hurricanes is that all this stuff extends out so far that it makes a big difference, like which bands are hitting who and when. And so again, the nice thing about my location here is that we're literally, let me zoom out a little bit here. We are literally tucked, like in we're tucked up in this part here. So hurricanes come, and this little sort of indent here where Florida and Georgia meet is kind of so when they come up the coast, they tend to stay further away from here. And so, and then the direct hits. So the direct only a direct hit, which is sort of would be an anomaly, would really affect us so much. They tend to sort of skirt up the coast or whatever, and we're tucked right in here. So, anyways, that looks pretty nasty, but it is what it is, and we got really lucky. Anyway, so I wasn't able to do a show. just because I was, first of all, I was afraid that the power was going to go out. Right, that was the main thing, and second of all, I just couldn't concentrate. Obviously, I had more going on. I had to sandbag my garage and get a bunch of supplies together, and you always got to prepare for the worst, right? And so I spent days, days going to the store and getting stuff together and freezing water and getting coolers out of the garage and sandbagging the garage, sandbagging the downstairs, and so it's quite the adventure. Hopefully that was the last one of the year, and so and putting getting everything back to normal takes a few days too, right? I don't know if you've ever sandbagged before, but those suckers weigh like 45 pounds, and it's backbreaking work, right? So, anyways, several days ahead of time preparing, couple days afterwards, sort of getting everything back together, and of course, we were preparing to have to evacuate too. So, it was pretty outrageous. It's definitely not a lot of fun. So, in past years, I have evacuated here. Um, a couple of times, there was a couple of times, a couple of years ago. I think it was Irma. I left here like with the assumption that my house may not be here when I get back, and that's pretty stressful. It really is. If you think about what you got to pack in your car to take with you in the event that your house is no longer is going to be just a pile of sticks when you get back, and so you talk about prioritizing the your possessions. Obviously, the is very stressful. So anyway, glad to be back. It's been a crazy market. I mean, the market has just been really, really unusual, as most of you guys know. The indexes don't even begin to reflect what's really going on under the surface. And if you've been paying attention past few days, you know that all of the momentum stocks, not all of them, but the majority of momentum stocks have been getting crushed, right? It's like all the institutions decided to bail out of the momentum stocks, or most of them, and buy the value stocks is what they keep talking about on CNBC. But I was looking through some weekly charts last night over at FinViz. I was looking at like my list of one of my screens at FinViz that has stocks with sort of like the highest beta that were up the most yesterday, and basically like sort of my high beta universe. And the amazing thing, this is just incredible. I haven't seen this in a long time, although I have seen this sort of thing before. Was that the stocks that were up the most were all in like severe weekly downtrends, right? That was the weird thing. Is the weekly charts tell you a lot more than the daily charts, obviously, and so what I saw was that like all the big movers yesterday were stocks that were in primary downtrends, weekly downtrends, and so those are not really the kind of stocks that typically you want to play. But there's talk of some rotation in the market. The funny thing is that they're kind of acting like a couple of days. This whole thing is some sort of a trend. So what I want to do real quick is before I get into let me just expand this a little bit. There we go. I have this watch list, one of my watch lists of what I would call like sort of high beta stocks or momentum stocks or whatever. And just to get an idea of sort of how crazy this market is. Now this is ZS is I'm sure there's some news here or whatever that's accounting for this. This is an anomaly today, so I'll just skip over that. But yeah, I'm gonna zoom through this watch list kind of quick, just so we can see some of the damage here. Yeah, this is kind of typical, right? This is these are the kind of moves that we've seen here just in the past couple of days here with the momentum stocks getting bailed out of. This is a gold stock, so gold's taking a little pullback. Oh, by the way, on the 18th, which is next Wednesday, is the Fed announcement, right? In particular, the software stocks, the SaaS stocks, been getting slammed, and some of the medical stocks, and basically like a lot of the high momentum stocks. And so, generally speaking, I mean that's kind of nothing new, but over the years you get these periods where that happens, and then it's really something to keep an eye on. There's a good one, AYX, right? I mean AYX has been a darling, right? Like we had a trade on it back here at the beginning of the year, way down here, and I mean look at this thing, right? And then so let's see, let me hit down here. I can hit. Oh, you can't see it on the screen. There we go. Year to date. So there's the year to date look at AYX, and absolutely amazing run. I mean literally like back at the beginning of the year here, this thing was trading for, just under $60, 57, $56 and almost to 150, and then just out of the blue, um couple of days here, one day in particular, that was Monday, they just slammed the thing, right? And so it's kind of odd to see that, because you would think that if an institution wanted to lighten up their position, they would try and do it extremely discreetly, right? So, and some of them have held up better than others, but the percentage moves in some of these things. There's another good one. Some of them are kind of starting to shape up and this happened really quickly. So you see these sell-offs like this, right? And then these type of stocks, a lot of times what happens is, it's sort of a panic low, and then they bid them back up. So one of the things that our system does, like, I'm just generalizing here, but one of the things our system does is, typically it's not going to like try and catch a V reversal. If this thing like consolidated for a period of time, like sort of in this range, then out here in the future, out here, it would look for a cycle back up. So trying to catch these quick sort of sell-offs and reversals is really super tricky, because what we're looking for sort of a stock that has more of an orderly pullback in a primary uptrend, and then begins to cycle back up. So we're looking for our system, I should say, looking more for up cycles than it is like trying to catch a V bottom. This Zoom has been a pretty popular stock since the IPO, and it started looking a little sketchy over here. And then there's nothing worse than like these little fake outs like this. Which reminds me, if you look at this, you'll notice that, and I'm just sort of doing a little lesson here. You'll notice that a lot of times our trigger price will be like above some of the recent price action, right? So say that was the trigger. This is the exact reason. Say the trigger was like anywhere up here. This is the exact reason that we recommend that you wait for a close above the trigger, right? Because what happens is that, like, people, this rally right here, people get sucked in thinking, you're going to get one of these, right? And then you get that reversal, and so you can see that, there was no closes anywhere in this area. And so that's why we like to use the closing price as the trigger, right? So anyway, you can see, there's another one, and these percentage moves were extraordinary too on some of these things. So you can see that, you can see how some of these really super hot high octane popular momentum stocks just absolutely crushed in like a couple of days there. This is a beautiful uptrend stock, and then all of a sudden, out of the blue, you get this rotation. There's another one. Health services, medical instruments. Look at that. All the way back down to, I mean, these things like gave back a lot of their gains in just a few days. So there's another good example too. Boy, that thing really nice uptrending stock and kind of pulled back a little bit and then all of a sudden just fell out. So I would expect I would expect some of these things to maybe have dead cat bounces or whatever. That's a pretty nice little spike pivot low there. So if you're super aggressive, something like this, theoretically, you could play a trade on this. I'd probably hold off a little bit, but this could be played as sort of a quick trade, right? Just throwing this out here as an idea. Now, this is, like I say, this is not really consistent with something that our system would do because it's designed to be a little bit more laid back as far as cycles go, right? It's looking for our system's looking for like the start of a new up cycle. And so when you see something like this, stock gets extremely oversold and it's likely you get a bounce, but it likes to play off of sort of narrow ranges. So you can see the setup here. Um, Very similar to back here, right? It's the same type of setup. And so with a lot of these things, if you wanted to be really super aggressive and just take some quick trades, and I'm just throwing this out here, I don't know anything about I don't know anything about this stock that we're looking at, but it's just it's the same sort of thing, right? You just kind of look for that spike low, and then you look for an entry sort of above that spike low, right? And you takes your chances, and you got to stop right there. And so it'll be interesting. This is out of all those charts, I can usually look at a chart like this and kind of figure out where would be a good spot for an entry and a stop and all that type of thing, just sort of based on the price actions. So this one looks like it has a fairly decent risk reward. Now it's a long way down to that low right there, 36.86. And so it's gonna be a few bucks down, but yeah, decent risk reward. Just playing that spike low there. So let's move on. Let's see what else we got here. Yeah, EPAM. So this is here's another kind of big momentum stock. So we saw a lot of this, right? This is kind of like a warning sign, a big sell off like that. Now, this could have been earnings right here, right? That almost does look like earnings, but consequently, this is one that triggered in and then looks like it came back down and but look at that 1 day sell off there. Incredible. A lot of these this one I've been sort of following this. I think this thing's a little bit thin, but this is a beautiful, really nice looking stock, and then you can see that sort of spike high reversal and a new high, big sell off there. MELI, same sort of thing. A lot of squirrely price action. I think that was earnings. So anyway, going down my list here, you can see some of these big sell-offs here. Really incredible. And so there you go. Anyway, so what I wanted to look at was, let me get my chart. Let me get my chart back together here. Look at a couple of the look at a couple of open trades here. There we go. Well, first let's look at the market, right? Um, all right, so let me just put a line right here on the 18th, which is, there it is, one more. All right, so here's the Fed announcement day, right? And so I mean that, today's Wednesday, we got a couple of more days, and then we got Monday and Tuesday and then Wednesday. So there's what? Today and then one, two, three, four, 5 trading days from now is when the Fed announcement comes out. If you'll notice, this was the last Fed interest rate announcement where they cut a quarter point, right? If I recall. And I mean the market had run up. There's the all-time high in the history of the world. A few days later, Fed comes out, and obviously the the initial reaction was negative, and then of course the following day is when Trump's slapped additional tariffs on China, and so anyway, we got that huge sell-off, right? But these Fed days. Here's the crazy thing, I've talked about this at length on this show, but it's something to pay attention to, right? Because lo and behold, same thing over here. You had an all-time high. A few days later, you had a. This is when they actually raised rates the last time, and I believe it was the ninth time. That was the ninth interest rate hike back in the fall, and we all know what happened subsequently. You got basically a 20% sell off, right? That was the biggest sell off we've seen in years. It was 20% from intraday high to intraday low. And then you had another Fed announcement here where basically they didn't do anything after sort of a big run up, and then we got it was about 7 point something percent sell off, and so there's 3 cases, one, two, 3 cases where shortly after a Fed announcement, or in this case, literally like the day of the Fed announcement, gapped up that day, closed down, and then started a correction. This one too. So, like the day of these Fed announcements can sort of mark a reversal point, and a lot depends on what the market has priced in, whether the market's priced in like a quarter point or half a point or whatever. And so I saw this morning that Trump's calling for 0% interest rates. And, that's another sort of weird thing that's going on right now. All these countries have negative interest rates. And I saw a chart yesterday that said that basically the banks or central banks own the majority of the negative yielding bonds, which is kind of convoluted. Um, Quick look at the weekly chart here. Here's something to note on the S&P anyway, is that this trend line I have drawn across the highs on the daily chart, basically goes back on the weekly chart all the way to the that big sort of parabolic run up we had in 2017, right? And then in January of 2018, the market had gone sort of parabolic, right? There was a lot of what they call euphoria, and then it took a quick nosedive. But anyway, that trend line right there has been containing the price action since the beginning of 2018, so almost 2 years, and you can see where it is on the chart here, and the idea is that even if we do continue to rally, right? It would be interesting to see, what happens sort of at that inflection point there. So a lot of let me zoom my chart out a little bit more. A lot of Wall Street has year-end price targets. Here we go. Well, let's see. There we go. That's about year end, right? Yeah, there's the year end. I might as well mark that as long as it's still in the 90s here, so it doesn't feel like fall, but there's the end of the year. There's how much trading we have to go between now and the end of the year. So it's always fun to look at that. Anyway, later on when I can full screen this chart, I'll extend this line out to the end of the year, And there was a guy on this morning. His year-end price target was 3,100, which is going to be above this line. I would say if I extend it. Well, I might as well. I can do it now just for the fun of it. Why not? I'm going to extend this out, and I can. If this is not perfect on my going back there, I can always go back and tweak it a little bit. But yeah, this is. I mean, this is so. Anyway, I got this range marked on here, right? Like the most recent range, and literally, let's see. This was 8/1, August 1st, and so we spent all of August, all the way up until just this past Thursday, inside of this big range, chopping up and down and up and down. And the funny thing was, it was very news driven, right? It's all about the trade, progress in the trade war with China and the Fed and interest rates and what's going on in China and slowing economic growth and all these numbers. And so I mean there's a lot of pieces to the puzzle that are sort of creating the narrative right now, and a lot of bizarre weird stuff. So it's anybody's guess what happens with this. But and the other thing, like I said, is that it's odd that the S&P, and especially like the Nasdaq, is only a couple of percent, a few percent off the all-time highs, but under the surface, there's a lot of stocks are getting decimated and destroyed, and huge percentage moves down in short amounts of time. So here you go. Here's a look at the rest of the year, and it's entirely possible that the market takes another run, or tries to do battle with that overhead resistance line. But that overhead resistance line goes a long way back, so it will be extremely interesting to see how things play out from here. So, well, let's see. I did want to look at some of these open trades we have here. So one thing, obviously you probably noticed is that we've taken some like small stop outs on a bunch of stuff because basically what happens is that this is the right now this is the top gainer in our open trades, and so I just want to sort of use this as an example because I got the trailing stops all marked real nice on here. Entry back over here, trigger was at $92, and so somewhere in this area would have been there's a close above the trigger, and so I was talking about, I guess, a couple of weeks ago when the market was sort of looking dicey and trading up and down in that big range. I was talking about setting a limit order right at the trigger, kind of one option. And so the cool thing is that while our system is all sort of programmed on the back end to do what it's going to do, trading along with it, we have a little bit of flexibility to sort of adjust our process a little bit based on market conditions. And so, one of the things that you can do based on market conditions is rather than chase a gap up at when a stock triggers in, and here's the thing: the open that day was 93.63, so that was a buck 63 extra if you'd have just pulled the trigger right at the open the following day after it triggered in. Yeah, and you can see, I mean, that still would have worked out okay on this particular one, but there may be some other instances where that didn't work so well because the stock didn't get any follow through, and so it pulled back. So, anyways, in uncertain market conditions, one of the tricks that we can use to sort of to trade a little bit less aggressively, besides obviously position sizing, is that we can set a limit order right at the trigger price and just see if we get filled. I think I did mention that a couple of weeks ago. Anyway, so what I was about to say is this. So, recently we've been getting these fills, and see the whole beauty of the trailing stop, the initial stop, and then typically trails up pretty quick. But sort of the beauty of it is, like I was saying before, it's based on time, not just price. That's why we're looking for a stock that goes into an upcycle. This one actually didn't have, I mean, it had a pretty decent pullback over here, but you can see, like, we didn't just jump in right after the pullback right here. So everything that's happening on our back end system is a function of price and time. And so basically what happens is you get triggered in, and the trailing stop slowly but surely starts to trigger up. And so what happens is, if you get into one of these cycles where the market starts, or a stock starts going up and then all of a sudden, falls back down, what happens is the trailing stop hasn't had time to get up to, the break even yet. So you can see on this one that it triggered in, and it took all the way until like here. So it would have been, a week basically for that trailing stop to come up to break even. And that's only because the price, just took off, right? And so if the price had spent more time meandering around in this area, that trailing stop would still be down here. And so it's possible that you get a pretty nice run, get a nice move past the trigger, but then it comes back down and falls down and hits the trailing stop before it's had time to move up past break even. I was looking at obviously Apple. So we got literally two trades on Apple in a row here, right? Um, this was the first one back over here. The trigger, it triggered in on this day, and then look at the next day, right? It's absolutely crazy. It gapped down, and you can see where it opened, right? So, if you've been following these stocks long enough, you've seen all sorts of crazy permutations of what can happen. And I got to tell you, this was one of the oddest ones I think I've ever seen, especially on a stock like this. So this day right here, you can see that open. It just so happened that the entire market had that humongous gap down in the morning. And honestly, I don't remember whether it was, China trade news or the Fed, or I don't remember what that was. I'd have to go back and match up the dates or whatever. But anyway, so, could have got a fill right at the entry. You can see that everything was coming along really nice, right? And this is another great example. It came so close to hitting the target there, right? This high, 214.44. The target was 215. Really, really close. And then, lo and behold, we had one of those, crazy sort of days. That was a big, big down day for Apple. That's not a typical day. By the way, this was earnings here, right? Stock had been sort of climbing up, climbing up, climbing. There was the previous trade in Apple. This one worked out really good, right? Kind of caught it early after a pullback, caught it early, and then rode it up to there. But yeah, so anyway, um, is what it is. But so check it out. There was a gap. This time there was a gap a little bit over the trigger. And when you're talking about Apple, $210 stock, um, trigger at 210, and so the open here was 211.95. Not a big deal. Not a big deal. Although, it's like a double-edged sword, like I was saying before. If you had set a limit order at 210, then this time around you didn't get a fill, right? So that's basically where the discretion comes in, and obviously, you can make those kind of decisions. This is a very odd sort of pattern with this with this one particular big down day and this crazy, you know, big up day, and then the gap down the next morning. So stocks get a little squirrely around earnings. But anyway, nice, pretty nice little, and you can see how this is coming up here. So here was my point that I was trying to make was as far as like how the system works. Since the trailing stop is both a function of price and time, it just so happens today, it's got that big move up. But if it had spent little time consolidating in this area and maybe had like had one of these days, like one of these 1 or 2 day pullbacks in this area, it would come down here and hit the trailing stop before the trailing stop had an opportunity to get up to and or past break even. So theoretically, like if the close were right now, I'm gonna mark this just in the area that I think when we run the update tonight, obviously based on price and time. When we run the update tonight, I would expect that the T stop, the trailing stop's finally going to, and so this is, I mean, the exact same thing that happened over here, right? It was only the trailing stop had moved within 50 cents of the trigger price. And so, it shows as like stopped out for, basically, for a teeny tiny loss there, right? In the closed trades. But on the other hand, getting this close to the target, sometimes you run up like that. Boy, if something gets that close to the target and the overall market, seems a little squirrely or whatever, obviously you could peel some off. Case there's a lot of things you could do. A case like this, theoretically you could take the entry, stick with the initial stop, just let it go. So there'll be plenty of trade. Trust me, in Apple. So that's it's one of the main stocks in our universe, and so each time that this stock goes through one of its cycles, it just so happens that this particular cycle is just really sort of wacky because of earnings and the volatility. So it's very unusual, I would say. So, here's another big name that Costco. Hey, Costco, pretty amazing. It got downgraded today, right? Somebody downgraded Costco, and so I didn't really pay a whole lot of attention to what was said, the reasoning behind it or whatever. I heard a little bit. Somebody said something about they wanted to get in a little bit lower. So Costco is actually coming out with earnings. Well, I guess in October, but yeah, this one actually turned out pretty good. So this is when you sort of get lucky is we got triggered in over here, right? Sort of in the triggered in, and then all of a sudden, and I don't remember what the news was that day, but pretty amazing. This is when you get lucky, when you get triggered in, and then all of a sudden you get a big giant long range day like that. And then of course, there was a parabolic stop the following day after that move, and it's done really well. Yesterday was kind of one of those crazy reversal days, right? And actually, there was another parabolic stop that was generated 298. So that would have been basically right under these two, right in that neighborhood there. Let's see, yeah. This low was 298.29. This low was 298.21, and so of course this parabolic stop at 292, this would have gotten taken out over here, but it keeps generating the parabolic stops, and it's designed that way because not necessarily on obviously a $300 stock, but on certain stocks and in certain cases, depending on what one's doing, these parabolic stops can be scale out points, right? So let's say this is a $29 stock, right? $27, 29, totally viable. Peel some off at the target, and peel some off at the various parabolic stops without selling out of the entire position. Is sort of the That's sort of the thinking there. The logic behind it is, not everybody. All or none trading is typically, we've explained this lots of times, but scaling out, at least splitting a position into two different positions, gives you a lot of, psychologically, it gives you sort of an edge, right? Because, like, say you not necessarily this one, but say you get in a stock and a few days later, boom, it hits a target. If you sell all of it and then it just continues to go up, then you're second guessing yourself. Well, why did I sell it all at the target? Sometimes selling it all at the target works out. Sometimes it doesn't. Everything's a double-edged sword, right? So anyway, splitting a position up. Um, let's see if I got a better example here. This is another high price stock. This is another interesting one too, but selling it all at the target, sometimes it just continues to go up. And in the past and in the future, we'll see stocks that they blow past the target and just keep going, never look back. And so by splitting the position up, you don't have to look back and say, boy, I should have held on, or I should have just used the trailing stop, or whatever. I mean, you're locking some profits in on the way up. And then the parabolic stops do the exact same thing, right? The P stops. They allow you to just sort of, stick in. And somebody was running a fund and had multiple amount of shares. Those parabolic stops can be good places to protect profits, is essentially what they're designed to do. They're designed to protect profits. The trailing stops really sort of designed to move up slowly in order to keep one in a position as long as the momentum stays intact, right? And so we're kind of in a weird little sort of spot right now because the market's been acting a little squirrely under the surface, and so it is what it is. But under normal circumstances, these trailing stops are sort of designed to keep you in. So let's look at oh, we already did look at this ABG. Yeah, and so there you go. I think we looked at this. I don't know. ABG. Yeah, this is the first one I looked at. So anyway, you can see that this parabolic stops kicked in here under that low, and so when the parabolic stop kicks in, see, here's the idea here is that, if you were in this thing, right, and it's a pretty good move. I mean, it's basically $10 above the trigger line, which is down here. So, $8 or $9, but it goes through the target, and once it goes through the target, then the parabolic stop kicks in. If this thing, just suppose it had one of these type of days tomorrow, like big spike up day, then that parabolic stop's just going to keep trailing, probably slightly, depending on what the price action does. It trails slightly under one of the most recent lows from the past couple of days. So in this case right here, you would probably want to protect that extra $4.25 in profit between where the trailing stop is. See, the trailing stop right now, I could probably move that over a notch, because that's actually, it belongs a little bit to the right. So these charts are a little bit quirky when it comes to marking this stuff up. But anyway, the current trailing stop as of last night's update, is here, right? But in real life, if you were in for this ride, you would not really want to let it fall all the way back down there. Although I'm pretty sure tonight it'll probably come up, another buck or two, right? So that trailing stop will probably end up right under the target on the update tonight, but at this point in time, that trailing stop's pretty far away. So what happens sometimes is that the stock gets momentum in your favor, and maybe doesn't quite make it to the target. Sometimes they actually make it to the target, and then you get one of those reversals, or you get one of those big crazy down days like we've seen lately, and then it comes all the way down and hits the stop before it was able to make it past the break even. So that's just something to be aware of. But anyway, so, kind of a crazy time in the market right here. Fortunately, we haven't had any gargantuan hits, honestly, compared to, we haven't really had any of these. I'm trying to think. We did have, I think Snap. Yeah, Snap was, and I don't know that I had this one marked up on this last little cycle here. Snap was kind of nasty. I believe we got sucked into Snap here at let's see, what's his date right here. Yeah, this is what happens. You get, and this was a beautiful, and anybody that's been holding a lot of these momentum stocks knows sort of this feeling, right? Um, but here's the thing: you get this little sort of false breakout here, and then let's see, where was the stop on this? 1540, and so the stop, yeah, was right there, sort of below the price action. So I shouldn't say that we haven't had any of these sort of nasty sort of this is what you call basically false breakout, right? And it happens occasionally, but we haven't seen very many of these. This hasn't happened very much, but it was the one particular case was a beautiful. This was a beautiful pattern too. So the thing of it is that when you got a system and you got a strategy, you stick to it. You don't second guess it. Um, you don't worry about, because for all the times that you get an anomaly like this, under normal circumstances, you catch the breakout there, and then it just keeps going. So, and quite frankly, in the bigger scheme of things, that stop was pretty tight right there, right? And so that's one of the things that we attempt to do. And so here's the thing: from here, Snap, this thing could bust down, and who knows what could happen from here, right? And so that's why you take your licks, and even if you get stopped out, a bunch of times, as long and they do add up. When things smooth out and you latch onto a couple of winners, it more than makes up for that. And so we have actually, if you recall, for the past few weeks, been sort of urging to sort of play defense a little bit and be a little bit less aggressive, because pointed out, when the overall market was in that trading range, up and down and up and down, the S&P trading in this 120 point range here, you get into a position near the upper end of the range because it looks like you're going to get some continued momentum, and then they slam the market down. Right? And so this whole little sort of breakout of this range here is weird, because of the fact that you got so many high momentum stocks that have gotten slammed. So this is a great example of basically what I call a full stop out, right? That's and so those are kind of rare. The full stop outs are rare, but they will happen occasionally on certain stocks, and there's every possibility that down the road that this turns out to be this could set up again, and it could chop around in here or whatever, and then end up breaking out and doing great, but can't take your chances, right? So Anyhow, that's what we call a full stop out. And so, you saw something like over here, you saw something kind of similar, right? Where you had a nice I don't need to put that on there. I'm gonna wrap this up here in a minute. There's a very similar sort of, on a different little scale there. Similar sort of pattern, kind of a channel breakout here. I mean, really, this thing, nice gap up, uptrend, gap up, uptrend. I mean, everything looking beautiful. And then this particular day, that particular day, right, you had a channel break, right? It looked beautiful. And then a big gap up the next morning. You're thinking, oh man, off to the races, right? And then boom, that big 2 day slam all the way down to the bottom of the channel there. And then another rally attempt and a lower low, which and we didn't have any trades there. I'm just pointing out how that particular false breakout of this channel back then was kind of similar to what we experienced right here. I should have just left this where I had it. Um, and so this was entirely a valid sort of channel breakout. I mean, it doesn't get much better than that, right? Big move up, nice consolidation over, a long period of time, and then a channel break, and then sometimes they just fail. So, there's a failure rate on these patterns. Any pattern that you try and trade, there's a failure rate, and so. But I mean, as I look through the list, very very few full stop outs other than this one. So I figured I'd show you what a full stop out looks like, right? And the funny thing is that it happened immediately. That's what's kind of crazy, and that's just due to some of the wild price action we've seen lately. So no huge big deal. Um, Anyhow, so I'm gonna wrap this up and keep your eye on Fed Day, and so anything can happen. Next a week from today, I'll be live in the morning, and so it'll be kind of interesting because we'll be able to see where we are, and we'll be able to see where the market is on this day right here, and we could be up here flirting with the highs. We could be back over in here somewhere. Now there's a gap here, right? So it seems like we're sort of consolidating here, and we could chop around, but the next big move is likely to come a week from today in the overall market, and so we'll see what happens with that. So, anyways, I will see you guys here 1 week from today on Fed Day, and we'll take it from there. So, thanks for tuning in. See you guys next week.